Hello everyone and welcome to the channel. My name is Brent and in today's video we're going to be doing an M1 Finance Roth IRA portfolio update going over the dividend investing journey. We started this portfolio 3.5 years ago, so I put out a poll recently on my community tab on YouTube going over what type of content the viewers, subscribers would like to see more of. The most selected one here was a dividend investing update, so that is what we're going to go ahead and make this video on. But if you guys are interested in voting, here we went ahead and posted stocks to buy, dividend investing updates and journey, recent financial news, stock comparisons, and other. You to drop a comment. So if you guys are interested in doing that poll, definitely go check it out in the community tab over on our YouTube page. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and of course, give this video a thumbs up, make it blue, and let's go ahead and get into the video. Now, jumping over into the M1 Finance portfolio, we can take a look at the overall performance of this portfolio. It has, as of today, hit a new all-time high and breaking the $10,000 gains in this portfolio. So here, as of today, on our one-day performance, we went up $163.94, which put this portfolio into the gains of over $10,000. So market gains is a little under 7,700, and our earned dividends is nearly 2,330. So overall, this portfolio has been doing really well. We're really happy with the performance of this portfolio. We do have some capital cash that's going to be invested here on Monday, so stay tuned for that video. Now, overall, this portfolio, its top three winners have been Apple, Main Street Capital, and Lowe's, whereas its three losers have been, Clorox is in there. It looks like a loser, but really it's been added here recently. The main losers here would be Simon Property Group, Altria, if you could call that one a loser, and these other positions have been recently added. I recently added Hormel Foods, I added Merck, I added Colgate, I added Clorox, I also added IIPR, Siggy, and MEI, and Kimberly-Clark. Actually, Kimberly-Clark may have been in there for a while, but the majority of these ones down here towards the bottom have been positions that I recently added into the portfolio because I feel that they're in good valuations where adding into them right now, it shows less risk and more reward. So I started buying up more Clorox, Colgate, Merck, Hormel Foods, and a few other positions, which we'll cover here in the future. So those have been our best performing and worst performing companies overall for the portfolio. And overall performance is money weighted. So depending on how much money I actually deposited into this account and its overall return. So our market gains of over 10,000 puts us at a little over $35,000 of market value for this portfolio. Now, our funding. So here quickly, our funding for this portfolio started off with $11,000 back in 2018. That is because up until you file taxes or the file tax due date, the 15th of April of that year, I think it is, you can deposit towards your past year. So when I started this portfolio back in January 2018, I put in $5,500 towards 2017 and $5,500 throughout the year of 2018 towards 2018. Then $6,000 for 2019, $6,000 for 2020, and here we are, $964 for 2021, but we are working on maxing that out throughout the rest of the year. So if we add this all up, the 11,000, the 12,000 for 19 and 20, and the current 964.26, we can see that our base investment in this portfolio is $23,964.26, whereas our holding here, our cost basis, is actually much higher versus our initial deposit. That's because inside of this portfolio, we've had market returns, which have helped push the appreciation higher, but we've also had dividends that have been paid out into the account that have been reinvested into dividend paying stocks. These dividend paying stocks paid out more dividends. Those dividends again were reinvested back into the portfolio, and it's been compounding and compounding over the past 3.5 years, where our cost basis is actually helped out in a way by the dividends that have been paid out, but they've been also reinvested. So our first year, we made a little over $500 in dividends. The second year, I think we made around $800 in dividends. And here in our third year, last year, we made over $1,000 or nearly $1,000 in dividends. And then here in 2021, we're on par, we're on trajectory to break the $1,000 dividend mark. We should receive over 1,000 dividends going forward using this portfolio, but those dividends are constantly being reinvested back into the portfolio, driving the dividend income up. Those dividends are buying back more shares, which increases the overall dividend income. And it's just a really nice cycle to see where 1/6 of our portfolio is now being paid out inside of this Roth IRA, where we may have a cap of $6,000 every single year. 1/6 of that cap that doesn't count against you is being paid out to you in dividends, which is able to buy back into those companies that you're invested in. So it's a really nice cycle to see, and we're really happy with the overall performance of this portfolio. Over the 1 week, we're up 1.17. So in between the S&P and the Dow Jones performance, if we take a look at the S&P for the week, it is up 1.67. The Dow Jones is up 1.02. So our performance sits right in the middle there, and we're up 1.17. And we broke to some new highs here this week, so happy about that. As far as activity within this portfolio, let's go ahead and select our ranges here. The month, 06. The date, 01/2021, 06/30/2021. And we want to focus on dividends, so we go ahead and select dividends. And for the month of June, I think we had received roughly $70 some. So I think this was the calculation here. When I added every single thing up in here, that 591 was the last one to get added onto here. Our total dividends that we received within this portfolio was $78.57. So that is pretty good overall. This is not our biggest monthly payout from this portfolio, but it is our second biggest dividend payout. We'll go ahead and cover our biggest dividend payout and how we are tracking all of our dividends in this M1 Finance portfolio right after this. So now that we've kind of seen all the dividends, if you guys are interested, you can pause it and go over each one. That made $79, but we actually use the Track Your Dividends website where we put in our portfolio. We went ahead and added all of our holdings, our shares, our cost basis into this, and we can see that our annual income is $1,034. Our dividend yield, if we were to completely buy the same amount of shares in this portfolio, we would have a dividend yield of 2.95%. But because we have held most of these positions over the past 3 years, our yield on cost over the past 3 years of growing dividends year over year over year is now sitting at a 3.65% for this portfolio. And the beta here of our portfolio, this actually shows your overall risk of your portfolio weighted against the S&P 500. So the S&P 500 has a beta score of 1. That's your base beta. And our portfolio actually sits under at 0.77. So it has less volatility, less risk involved versus the S&P 500. So kind of interesting to see that data here in this website. It's a completely free website. We've talked about it in the past. Now, the great thing about this website is down at the bottom, I can see my expected dividends here in the month of, we'll say September, because what are we in? 6? So 3, 6, 9, 12. So every March, June, September, and December, those are your 3, 6, 9, 12 months. I will receive roughly $79, and that is very accurate. As we counted up all the dividends, that was $70.57. So this tracker is very accurate as far as our dividends. Now, in between this time, if one of the dividends that paid out in June raises their dividend, this will actually fluctuate to increase to the new dividend, the new dividend rate. So that is really cool. Now, our biggest month that we received dividends is here coming up in July. So in July, we should receive roughly $133, depending on our current portfolio, the shares and their current dividend payouts. And then in the month of August, we receive roughly 48. So that's a really interesting chart here. And another cool thing on this website is I can see upcoming dividends. So here I can select here. I can see the breakdown. My highest month is 136, my lowest is 48, and my variance between the two is 64.8%. Now, I don't pay for this website. It's completely free. If I were to pay for their features here, I could enable X dividend dates. That's a premium feature. I could also set up to receive when I'm paid out a dividend. And that's another premium feature that you can enable or disable there. So kind of interesting to see that. And here, another cool thing here is a stock payout calendar. So every month, what companies are paying out that month. Now, we noticed here that August is my lowest paying month here at $48. And some of the companies here that I recently added into my portfolio. So if I go back to my portfolio and take a look at the worst performers, these are the companies that I recently added into my portfolio: Clorox, Colgate, Hormel Foods. Not knowing that these companies actually paid out in August, in the month where I have the least amount of dividends paid out. These will actually help raise my average dividend payout, but also raise that lowest payout month. So here, Clorox pays out $12.60. I probably won't add any more equity into that position, but I am going to be working on increasing Colgate, which pays out right now $1.62. But again, that will rise as I add more shares. And Hormel Foods pays out $1.04, but again, that'll rise as I buy up more shares as well. And Hormel Foods pays out 98 cents per share for the year. They're currently priced pretty low. So as I bump up, say I add $2,000 of equity into this position, that'll get me, say, roughly 41 shares. Multiply that by that 98 cents per share. I should receive roughly $40.18 for the year. That's a little over $10 a month, a quarter that's added on to that month, that quarterly payout. So instead of 48, it'll bump up to 58. And then if I do the same thing here with Colgate, same thing with Colgate. If I get that equity up to about $2,000 based off their current price of $81.70, that'll get me roughly 24 shares of that company. They pay out $1.80 every year. That's again another $43 a year. Divide that by 4. Every quarter, I should get another $10.80 added on there. Now, it's going to take a while to increase the equity into these positions unless I do like a large equity deposit into the account. And I could totally do that. So I'm kind of still deciding whether I want to go ahead and deposit a large amount up front just to kind of get it going, or just continue to dollar cost average on a weekly basis. I'm kind of in the air over, what is the best way. I feel that both Colgate and Hormel Foods are both at really good valuations right now with more upside potential. So if I don't act now, I could miss out on the opportunity. But at the same time, what if there is a bit of a pullback and there is opportunity coming? So, that kind of brings up the whole other thing of timing the market versus timing the market. So is it better to just be in and invested, collecting dividends, collecting potential appreciation, or continue to dollar cost average? Not really timing the market, but you have a schedule. You're kind of set on a task. So either or kind of works. So we'll kind of see how that kind of goes and plays out. But that'll definitely increase that minimum. Once I bump up those two positions to about $2,000, that should go up to 68. Hopefully we can find some other positions or increase our equity in other positions to increase other months. I would like to see this portfolio, on average return over $100 of dividends every single month. So that would just be another $100 every single month being able to be reinvested back into the portfolio, which I think would be pretty exciting. Another website that I really like to use for tracking X dividend dates, and we kind of saw a little bit of that, was Seeking Alpha. I use Seeking Alpha a ton as well. Here on Seeking Alpha, you can put up your portfolio in here, have all your shares, and here they have a dividend tab where you can select dividends. You select it to sort by X dividends, and you can actually see what companies are going X dividend in the month that you're in. So here in July, Hormel Foods is actually going X dividend on the 9th of July. So right now, as I'm building up that position, it might be nice of me to start adding more equity into Hormel Foods up until X dividend, or even afterwards, because They are currently offering a 2.01 yield. I feel like they're currently valued fairly well. Rising dividends for the past 21 years. They have a 5-year growth rate for their dividend of 12.08%. So interesting there. So I will probably, in this upcoming Monday, I'll probably end up targeting Hormel Foods, but I see Colgate is here as well, coming up on ex-dividend on the 20th. So we have some options. Clorox there is on the 27th. So all 3 of the companies here that I've recently added to the portfolio, all coming up on ex-dividend in July. But this is another free tool that I use in order to find ex-dividend dates. So between Seeking Alpha, checking out the ex-dividend dates, and trackyourdividends.com, I use both of these to not only track upcoming ex-dividends, I also am able to track the current equity, the current annual income. So the current annual income is 1,034. Take that, divide that by 12. So currently, on average, this portfolio is generating roughly $86.17 of monthly dividend income. So my current goal for 2021, I should be able to break roughly $100 of monthly income. So $2,000 into Colgate, $2,000 into Hormel Foods, and that leaves me with another $1,000 to invest somewhere else. You know, we already invested nearly $1,000, so we have a little over $5,000 to invest for the remainder of 2021. I kind of have my eyes set on Colgate and Hormel Foods, and then we'll kind of break up that remaining $1,000 in between other positions, and we'll try and bring our base average dividend income over $100. I think that is a pretty good goal to set here for 2021. So want to go ahead and include that here in the video as well. So I think we got everything covered as far as the journey goes for the M1 Finance portfolio. Overall, the M1 Finance portfolio, I believe, does almost produce, a good amount of our dividend income. The majority of the other portfolios are all ETFs. So our M1 Finance portfolio definitely has the most holdings out of everything. That is basically it for our M1 Finance investing portfolio and the journey that it's been on. I'm really happy with the current performance of not only its market appreciation, but its dividends as well. And we've already set up some goals to hit here in 2021. So let's go ahead and see if we can make that happen. So that is going to be it for this video. Let me know down in the comment section below if you have any questions. Again, if you are brand new to the channel, we cover making money, saving money, and investing money. So if you guys are interested in any of those topics, definitely go down below, hit the red button to subscribe, make it great. Hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue, and I will see you guys in the next video. Bye-bye.